Welcome to PhillipCapital Weekly Market Watch. Gold prices had seen much movements over the last few weeks and is likely to see more action. Today, we have Mr. Adrian Koh, investment analyst from Phillip Futures Research Department, to share more with us. Hi Adrian. Gold has risen to a high of above $970 an ounce recently, but is trading back in the $940 regions as of 11th August. What are the recent drivers behind the fluctuations in gold?
Gold recently reached a high of over $970 an ounce last week, but failed to hold above these regions as a strengthening dollar offset gains in the precious metal. Positive economic data in the form of a smaller than expected job loss for the month of July boosted the dollar and increased investors' sentiment that the economy may be stabilizing. The recent gains in the dollar despite positive economic data meant that the dollar saw a deviation from its correlation with risk aversion. The gains in the dollar from oversold levels and a rebound of technical support levels kept any potential rise in gold, as the precious metal remained in strong inverse correlation to that of the greenback. Softer investment demand for gold also weighed on prices as holdings of the SPDR Gold Trust declined by more than 65 tons, or 5.8% since its record levels of about 1,134 tons as of June 1st.
Besides the mentioned factors, are there any other key news investors should take note of with respect to gold?
The European Central Bank surprised markets last week by announcing a third central bank gold sales agreement, restricting official sale of the precious metal to 400 tons per year. While markets have been expecting a new central bank gold sales to replace the existing agreement, the lower 400-ton limit per annum came as a surprise as compared to the previous 500-ton limit. Central banks under the agreement include most European central banks such as Germany, France, Italy, Switzerland, and the European Central Bank, just to name a few. Despite the gold sales pact, gold sales by central banks in recent contexts have slowed as data in the final year of the second pact totaled only 140 tons by July. The World Gold Council reported that signatories have only sold 1,867 tons of their 2,500-ton limit. For gold sales to reach the agreed limit, we probably will have to see a large central bank such as France or Germany announcing gold sales. But this will be unlikely as France recently came to an end to its gold sales program, while Switzerland have announced that it has no plans to sell more gold in the near future.
So Adrian, what's your near-term and longer-term view on gold? Are we going to see a retest of the $1,000 highs, or is gold likely to remain in $900 regions?
Despite attempts to retest the highs, gold remains on a 6-month sideward consolidation pattern, and the precious metal should continue to trend between the ranges of $920 to $980 an ounce in the medium term. This week, the markets will be focused on a string of economic data including US retail sales, industrial production, and the Federal Reserve's key interest rate meeting on Tuesday. The US dollar remains as a key driver for gold, and a continued revival in the dollar could place further pressure on the precious metal and dampen hopes of a retest of the $1,000 mark. Near-term uptrend support for gold should come in around $940 an ounce, and a break below these levels should see gold heading much lower to the 920s.
Thank you, Adrian, for your time. That's all for today. Stay tuned next week for more market updates.